Nvidia is a perfect example of why I never short a stock. A few months back, I went to look at it because ChatGPT was blowing up and I thought, this is the company that is selling shovels. There's a proverb that back in the times of gold, the people that made the most money were not the people mining for gold, but the people selling shovels. And in the world of AI, Nvidia are selling shovels. In the last year, their earnings have gone up from 18 billion to 30 billion. But this has also led to an extraordinary increase in the share price that actually means that Nvidia is now worth more than the entire stock market of China. To put it another way, if you had $2 trillion today, you could either buy Nvidia or China's entire economy. Now, I really don't want this video to be a takedown on Nvidia. I don't want to deter anyone from buying it. What I'm going to be doing in this video today is working out what are the minimum expectations for this stock going from today. Now, if we take the entire value of the company, which is $2 trillion, and divide it by the earnings of the company, 30 billion, then it will currently take 72 years for Nvidia to pay you back. Now, this is a very basic way to value a stock, and it's not at all fair. We do not value any companies in this way. All stocks are priced with an implied future growth in their earnings. So what this does mean is that people are expecting Nvidia's earnings to grow a lot. That's totally fair, but as investors, you've got to ask how much a lot. So in my opinion, all decent investments return 100% of your investment in earnings alone within 10 years. That means a successful investment for me is when I invest £100 today, and in 10 years time, I have £200 in earnings alone, plus the value of the shares. Apple made 100 billion last year, so that would mean it would take around 20 years for Apple to pay you back. So the earnings growth you would need for Apple to pay you back in 10 years is 25% compound annual growth rate. Nvidia at this price would need their earnings to grow by 48% annually in order to return 100% of your investment within a 10-year period. The remarkable thing here is actually Nvidia has been doing this. Nvidia's 5-year compound annual growth rate is around 50% and 90% in some metrics. However, when you go back over 5 years with Nvidia, this is going back to a time before they were making money through AI to a time after it. The question is the entire AI market going to be growing by that amount over the next 10-year period? I want to say that while it might sound like I'm slagging off Nvidia here, I have been genuinely impressed with Nvidia's earnings. I also am shocked by how incredible AI is. If they continue to grow their current rates of 100% annually, then they will of course outperform everything in the S&P 500. But to do this, either the market would need to grow significantly or they would need to retain their 95% market share. Nvidia is so ahead of the competition at the minute, and their AI chips are so advanced that their most advanced chips are currently selling for price tags of $60,000. This sounds fantastic, but it means that companies like Google, Apple, Meta, and Microsoft are all developing their own AI chips specifically designed for the software that they are developing. Over time, it is natural that Nvidia will need to lower prices on their most advanced chips in order to appeal to a broader audience in order to obtain more earnings. If they didn't want to do this, they would alternatively have to continuously revolutionize the product so that tech companies had no choice but to buy their most advanced chips every year. It is a testament to the CEO of Nvidia's foresight that they began developing AI chips way back in 2006. However, knowing this means that we can't anticipate revolutionary changes every year. These chips took decades to develop. Amazon makes for an interesting comparison to Nvidia in terms of an investment. Amazon for now is priced less than Nvidia. However, it makes the same amount in earnings, but that is when the similarities end. If Amazon wanted to earn 50 billion more in 2023, all they would have had to do is spend 10% less of their revenue in research and development. Amazon spent 85 billion in research and development in 2023, while Nvidia's entire revenue was 60 billion. When I look around for competition for Nvidia, I see it everywhere. I see many massive companies capable of matching Nvidia's investment into AI chip production and have massive financial incentive to do so. When we look at Amazon, however, there are very few companies that are even capable of investing 85 billion in a single year into research and development into e-commerce, and very few of those companies, or none of them, have an incentive to do so. While there's no question that Nvidia could outperform Amazon in terms of earnings, there's no question for me that Amazon's earnings are more secure. However, the reason that I won't buy Amazon or Nvidia or any of the big tech stocks is because I already hold them in the US 500 accumulator I have on Hargreaves Lansdown. Thanks to this, I have been buying Nvidia shares for years. In fact, if I'd been investing even sooner, I could have been buying Nvidia shares all the way back from 2001, 5 years from when they started even developing AI computer chips. So here's the thing, don't be an idiot. If you really want to be rich, you've got to do this.